Welcome to another edition of Medicare Simplified with your host, Dave Miller.
Hello, everyone. Welcome back to another edition of Medicare Simplified. I'm your host, Dave Miller. And today I've got Matt Allina back with us. We're going to talk about final needs planning. It's not the most popular subject around, but as the old adage goes, there's two things you can count on throughout your lifetime. One, you're going to pay taxes, and two, you're going to breathe all the way up to the day you're going to die, and you have a 100% chance of somewhere in the next 150 years you will pass away. So with that in mind, give me a second. We're going to transition in and bring Matt back into the picture. Good afternoon, Matt. How you doing?
I'm doing great, Dave. How are you?
Doing fantastic. I do appreciate the time you're giving us again today. We had a great podcast interview the last time when we talked about how to protect the Social Security income. And today I want to talk about final needs planning. It's not the most popular thing for people to talk about. I know some people are kind of antsy about it, but it is a topic that needs discussed. So what can you tell us about final needs planning and how important it is?
Well, it's 100% probability that we're going to die. And you either can leave a legacy of love or a legacy of debt. Let me ask you a question, Dave.
Sure.
Would you ever ask your kids or your grandkids for $10,000?
No way.
How about $5,000?
I don't want to ask them for a single dollar.
That's all of us. It's not our job. I would never ask my daughter. I would never ask my grandkids for money either. That's not a part of our DNA.
Right.
But if we don't do any final needs planning, we're still planning. We're just planning to fail. And we're basically, if we don't do anything, we're putting a $10,000 debt or a $5,000 debt where they have to come out and figure out and put on a credit card how they're going to take care of our final needs, whether it's medical bills, whether it's a full burial, cremation, all the other bells and whistles that go along with funeral planning, final needs planning. So if we don't do something with this and do some final needs planning, we're leaving it up to our kids and our grandkids and our heirs to pay for things that we should have taken care of a long time ago.
Makes sense. So what's the best way to plan for this?
So one of the things that I would say is have a conversation with a professional like you, like me. Together we can collaborate and work for your client in the best interests. Find out what their final wishes are. Do they want a full burial? Do they want a cremation? There's different costs associated with that. For some people, they want to be cremated, not because they want to be cremated, but because that's all they can afford. Some people want the full burial. Either way, we can help them, but it goes much beyond just funeral planning. It's also paying off credit cards, paying off car loans, paying off the mortgage as an income replacement, medical bills, other things that may fall into the lap of our spouse, our children, our grandchildren. And you may not be married. You may not have any kids. It may be nieces or nephews or someone else. If you were to go on a website called GoFundMe.com, it's a great place where people will donate money to other people for different causes and things like that. There's over 3 million people in the United States asking for money to help bury a family member or to provide a memorial service for a family member. Why? Because they didn't fund themselves to start with. And that's where you and I can come in and have that conversation with somebody. It's very simple to qualify, and it's very simple to provide a benefit for somebody and customize a program that's going to fit that person's budget and fit their needs.
And, you just never know. You could have a heart attack and fall down and be gone. And if you don't have some money in place and you don't have a final expense policy, now your children or grandchildren, bare minimum, are going to need, 3 to 5,000 for cremation and an urn that looks kind of like a Folgers coffee can, which I mean, to some who cares, but others don't want to be in a coffee can. They'd rather be in a nice urn. And I don't want to be like that, which is why I got a $250,000. Of course,
Yep.
I got it when I was what, 25, 27, and I'm not going to beat that rate.
No. Nope.
And the cash
Earlier,
value is now paying for the policy. So it's not costing me anything now.
right. But there are people today that they have worked hard their entire life and they just never had that conversation about death, dying, all of that. And now they're past the 50-yard line and they need to make some decisions now. And there are some people that are past their 50-yard line that may have some health problems, but they're not that significant. And when I say they're not significant, diabetics are accepted. People that have had heart attacks, cancers, or strokes, they're accepted. It just depends on how long ago and what they've been doing since that event. And as long as they've been following doctor's orders and they're taking their medications and stuff like that, we can help them. And the application process, Dave, is so simple. Just a few medical questions. There is no nurse that's going to come out to see them. There isn't going after medical records. We can get decisions from an underwriter, usually within the same time that we're meeting with that client. So it's not invasive at all. And best part about it is the client is getting the peace of mind. Their family is getting the peace of mind knowing that there is something there. And let me tell you something else about life insurance in general. Doesn't matter what type of life insurance policy you have, life insurance policies avoid probate and they avoid taxes. So it provides cash right away to the family. So if somebody has a 401k or a pension or some other survivor benefits, a lot of times that money is tied up in probate and people can't access that. People can't, and there may be taxes that are also that need to be paid on that as well. Life insurance is probate. It avoids probate, tax-free and clear. There is no taxes on that. So if you have a $25,000 benefit, a $250,000 benefit, whoever the beneficiary is, they get that money free and clear. It's like giving them a crisp $25,000 or $250,000 bill.
You
No
can't beat
questions
that.
asked. Not at all.
And if you do have, let's say you do have a significant amount of money on hand, this is a fantastic way to say you get $500,000 and you've got 4 kids. That's the best way to give each of them $125,000 tax-free, no probate money to remember you by, to where they can now get out of debt, pay off a house, put their kids through college. It can be done. Any one of a million things can be done with that money. And if you survive your spouse, then the kids would get it. If you're still married and your spouse survives you, then this gives her peace of mind knowing she can pay off the house. If she needs a new roof, if she needs a water heater, HVAC, she has the money. She can stay in her home and she won't have to worry. And there is nothing better than that, because that gives you peace of mind and you don't put a price tag on that.
There is nobody that I've ever talked to that's widowed that has ever said that the life insurance benefit that they received was too much. That's never been told to me in the almost 25 years that I've been in this business. It's the families where they didn't do anything, and you have families, you have sons and daughters. They'll call me up in my office and they're like, is there a database or a place where I can see if mom or dad had a life insurance policy? We're really struggling here and we need to know. And unfortunately, there isn't a database. The database is hopefully in mom or dad's safe or in a file drawer somewhere, and you can see that they have a life insurance policy. Otherwise, you're not going to know if they have a life insurance policy or not.
And Matt, a lot of people don't realize, let's say they want a $250,000. They find out what the premium is because they've waited and they're say in their 40s. I can't afford it. What do I do? Well, then they say, well, how much can you afford? Well, let's say their premium was $320 for a quarter mil. Well, I only got about 175. No problem. We'll run what you can afford and give you a face value. Hopefully it'll be comparable to what you can handle and it'll be good to go and enough for your needs. So can't afford the face value, we'll run what you can afford and give you a face value. We can run it either way. And how many carriers do we represent? I forgot.
Over 50 different companies.
In
over
how many
50 different
states?
companies. All 50 states. We do most of the business that we do is in the lower 48, but we do have clients in Hawaii and we do have clients in Alaska as well. The thing to keep in mind is having some insurance is better than having nothing at all. It's not feast or famine with insurance. Having something is better than nothing at all. Even a little death benefit, a little benefit for the family will help than having zero, nothing, nada.
What would a modest, and I mean modest, I'm not talking about a gold trim casket, having a band and all that. But if you took a modest funeral where someone is put in the ground and say a nice but not luxurious reception afterwards, what would that cost on a ballpark figure? Because every state and every county is going to be different, but ballpark it for us.
Keep in mind that the funeral homes, cemeteries, they're in business to make money. So they don't do this out of the goodness of their heart. So with that, for a full burial, where they're opening the vault, opening the ground, have a nice luncheon afterwards where they can tell some funny stories about you, anywhere from 10 to 12,000 in today's dollars is for just a modest, is for a modest one. But there are going to be times where some people have greater needs. Let me explain how that works. So some people may not have been born here in the United States, and their wish is to be buried back home, whether it's in another country, whether another continent. It costs a ton of money to do that, to repatriate the body back to their homeland and then go through the government red tape. And it's thousands upon thousands of dollars. This policy, a final needs plan, can also accomplish that. So you may have a need, your audience, somebody in your audience may have the need or they have the desire. Let's say they're from Puerto Rico or they're from the Dominican Republic or maybe from Africa or Europe, and they want to go back to their family homestead, their family land. They can do that, and it's going to cost the family a lot of money. So the first thing is letting the family know, I want to be buried back home. But then also there's an insurance policy with a $20,000 benefit that's going to pay for all of that so that I can go back home, because you have to hire the airlines and talk to the airlines, and you have to talk to all the different government agencies to pre-plan all of this stuff. And every government has their own fees. So a modest burial, everything here, 10 to 12. If you're looking to be buried back in your ancestral land, it could be $20,000, $25,000, $30,000, and we can do that too.
So what I would suggest is, if you do want to go back to Puerto Rico, Dominican Republic, Jamaica, Europe, I would suggest take a look at what it would cost to do that today, and then figure out what you want in the way of a casket and how much it would cost them to prepare you and all this thing. Try and do a little shopping around, make some inquiries, add it up. So let's say it comes out to $28,500. Get a $35,000 policy, because what's going to happen in 5 years? Those numbers are going to be worthless and the price is going up. And if it's anything like the last couple of years, you might want to double that. So it doesn't hurt to get a little bit extra. What's the worst that can happen? You'll have a little leftover money. Well, that'll give them a chance to maybe take a few weeks off and mourn, grieve, and not worry about the loss of income, because they'll be on sick leave or what have you. And this way you got a little money to take care of the bills while you're not getting a full paycheck if you don't have any vacation time built up.
Right.
Well, Matt,
Exactly right.
once again, I do appreciate your knowledge and your everything, the back office support I get and everything. It's been great having you on here again. Next time, I think we're going to be talking about different types of insurance, like whole life, term, and how we can use them, convert them, and the differences, and how easy it is to get some over the others, right?
Yep. Absolutely. It was fun talking to you again today. I enjoy doing these, and I hope your audience realizes that there's a lot of wealth of information that you share on these podcasts.
Matt, I got a large listening office and it's growing every day. And it's thanks to people like you taking a little time to share your knowledge and help them learn something, as well as me once in a while, about life insurance or annuities or Medicare in general. And ladies and gentlemen, once again, this is Matt Allina joining us, talking about final needs planning. Not the most popular or fun topic, but it is one that you need to have with your loved ones at some point in time. This has been another edition of Medicare Simplified. It's been great talking with you again, and I look forward to speaking with you again as we continue our journey and doing it right with no mistakes. Have a great day. If you've enjoyed this podcast and don't want to miss future episodes of Medicare Simplified with me, Dave Miller, please subscribe wherever you get your podcasts. And don't forget to check out my book, Medicare Ready, Set, Go, available on Amazon in paperback and Kindle format. If you're looking for Medicare advice, please reach out to me at dave@mig4u.net or online at mig4u.net.